Friday's report from the U.S. Labor Department had a severe impact on the financial market. However, there are trading instruments that barely reacted to the news. Let's talk about them. Thus, oil was one of those that showed little reaction to a sharp decline in the dollar caused by Friday's report from the U.S. Department of Labor. The restraining factor is the rumors about oil production volumes spread by Western media agencies. According to rumors, although Saudi Arabia and Russia agreed on additional oil output cuts, the latter increased its oil production. So far, there have been no official statements confirming this fact, either from Moscow or Riyadh. Nevertheless, these rumors, coupled with the lack of comments from officials, are still putting some pressure on oil prices. If there are no remarks on this issue in the near future, the asset may edge lower. Meanwhile, Brent crude oil continues to trade upwards, with the quote holding steady above the level of $86 per barrel. There is also an intraday signal indicating that the asset is overbought. At the same time, the area of 86 and 88 previously served as a point for a bearish reversal. However, despite technical indicators suggesting weakening upside momentum followed by a pullback, and the market remains bullish, thus technical signals may go unnoticed by speculators. Speaking of gold, it responded to the U.S. jobs data with gains. Nevertheless, there are already signs of a downward pullback, which hints that the currency market may follow suit. After all, a weaker dollar was rather emotional in nature, and a pullback to the previous levels is almost inevitable. Apparently, this is exactly what will happen today. At the moment, the situation is quite stable. Market sentiment remains bearish, dragging the quote down to $1,925 per troy ounce. However, if the quote rises above the 1,950 mark, the metal will have every chance of extending gains, heading for the level of 2,000 and above. As for the ruble, the key influencing factor was rumors about Russia's non-compliance with the agreement to cut oil production. If this is indeed the case, oil supply will be above forecasts and prices will go down. This, in turn, may lead to a shrinking current account surplus in Russia's balance of payments and therefore to a weaker ruble. If there are no statements denying the rumors in the near future, the greenback may advance to 100 rubles. However, this rally will be purely emotional, that's short-lived. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.